In 2021, there's never been a more important year to look at tax planning. With all the stimulus money that was injected into a lot of businesses with JobKeeper, cash flow boost, and all the different tax stimulus measures that have been announced that are going to affect the 2021 year, it's really important that you get your head around what these measures mean for you and your business, and also what it means for future tax years, because some of the impacts will have major impacts this year that will affect the tax you pay and make future planning really, really important this year. So first off, there's been part of the COVID measures was an instant asset write-off that has increased from $150,000 asset limit to an unlimited asset purchase. So if you're a trucking company and you've bought a truck worth $400,000, you can write off the $400,000 purchase. So obviously this has a lot of impact in the current year, but also for future years, in that the depreciation moving into the 2022 and future years will be either zero or next to nothing. The next measures that have changed are in relation to superannuation. Superannuation changed in the 2019 year that allowed any unused concessional contributions from the 2019 and 2020 year that can be caught up in the 2021 year, but also we can go 5 years. So up to 2023, you can pick up your 2019 unused contributions. So for the current year, if you're in a reduced tax environment, it might be worth delaying any super contributions until next year in order to pick up any of that unused cap this year in next year if you've got a really high depreciation claim. So again, just the planning around that, it's really important that you get your head around it, and we tailor our advice to your individual circumstances, and that's why tax planning is really important this year. The next budget measure that was introduced in the 2021 budget was in relation to a loss carryback provisions. What this means is that if you've made a profit in 2020 and paid income tax, and in the 2021 year you've got a loss, you can pick up some of the tax that was paid in that 2020 year and get a refund in the 2021 year based on the loss that you've currently got. So again, tax planning around this is pretty important to make sure that you are aware of it and that you can utilise it. And if there is a loss, then can we pick up some of the prior year's tax paid?